All right, welcome everybody. Let me just make sure everybody can hear me okay. Let me know in the questions window on the webinar software. Just let me know that you can see my screen. You should be able to see that and also hear me. All right, and so I hope, okay, good. So I hope everybody's doing well out there. All right, just a quick announcement. My new book is now being shipped. Pretty excited about it. It's a pretty thick book, about 608 pages is what the final count was on that. And you can get that at Amazon. I'll put some links up for that, but you can just go to our website or go to Amazon and type my name in and find it that way. All right, how many out there are playing Bitcoin these days? How many is playing Bitcoin? All right, good, quite a few. We got a good turnout today, so all right, good. Okay, so let me just go over this a little bit because in going over it, you'll kind of learn a little bit also about how to approach things and use our software. All right, so a couple things here. One is that you can certainly see all the pyramids from our trading software going up in this direction, right? So that was a nice move to the upside, fairly hyperbolic, and the owl is telling us that is wave 3, right? So that's kind of cool, all right? So that's your wave 3. And now what we do is draw fibs in, and we don't take the lowest point, we kind of take the second lowest, because if that's a 1, 2, 3 in this sequence that began back here, then that's where you want to kind of draw the wave count from. And so we anchor the fibs on 2 and 3, right? Which would be here and here. So based on that, we get a high probability target zone right here. And that would be a wave 4. Now, it doesn't matter what market you're looking at, what time frame, etc. It is basically the same way. You do it the same way on any time frame in any market. And so this is a high probability zone, this zone between the two blue lines. And in terms of the Fibonacci ratio, that's 38.2% down to 61.8%. And so basically the Fibonacci has come about because A, it's a Fibonacci, but also 2, it is a representation of human nature, and it's the ebb and flows in the market usually reach these Fibonacci numbers. Profit taking and psychology, mass psychology is behind that. And so we look for it to end somewhere in between these blue lines. And 70% of the time, it does, all right? 15% of the time, sometimes it's shallow and it does not get to that 70% area. And so if that happens 15% of the time, and then 15% of the time, it's a little bit lower, but it usually does not go into the wave 1 area. So 15% of the time, it would be in this area here, which is a deep retracement. A deep retracement means that the next high on the fib extension will be, of course, not as high as it would be if it was a less of a retracement. All right, because we use the anchoring point on wave 4 for that fib extension. All right, so here's kind of an interesting thing. Based on that information now, notice here, we've come really close. And in life and in markets, it's all sometimes by degrees, right? So what are the chances of that being a bottom? Well, it's possible, all right? It's in the 15% area, okay? And we've drawn these fairly accurate. So let me just make sure this is right down there. And so it missed it by a little bit, but darn close. And then if we go ahead and magnify this, and let's just open up this chart and focus on this for a moment. If we magnify this, we see a very, very bullish candlestick right here, okay? I'll put bullish, bull, I'll put bull. Okay, so that's bullish. And whenever you see a candlestick with an extremely long wick, all right, and then a move off that on the following price bars, that's a pretty good sign that that's significant. However, all right, we have to take a look at all this in context. So first thing we know is on a correction, we usually see an ABC type of situation. Now, at first, it was looked like it may be, well, we may have something like that, ABC down this way, right? But it really, it didn't hit the high probability area. And usually the C wave is at least the same distance or length as the A wave. So that failed there. So chances are not so much. All right, so if that's the case, then does that mean this is an A, B, C all the way down here? All right, in this case here, because that went a little bit lower. And okay, possible, that's possible. But again, it's not high probability. All right, so then the market goes up and we get another turnaround bearish duplex candle where it goes up and then down. That's bearish. And then that drove prices down for the next several weeks, rather, where it made this eventual low here. So now we've got even a more interesting problem. So now we've got maybe an A, B, and C. All right, C is fairly close to the distance of A. So this first move down here is A, broad base B, and now a C. All right, so is this the bottom? Well, it certainly could be. All right, but also too, we may go up and turn around and come back down. So anytime you miss the high probability area, you have to be somewhat suspect. And that can create a problem because it's you're looking for the absolute retracement before you actually go long, right? And this kind of, mumbles it up a little bit. So what do? Well, there's a couple things you can do. If you have an extremely bullish price bar that came fairly close, and it did, it came fairly close, basically, I think 90 was a low on this thing. So it came fairly close, but not quite. So it could be a 15%er, right? And okay, we could be going into a complex correction too. So what do? Well, you got two choices. You could either go in one tick above this bullish bar, and if you wanted to go in with a full position, you might instead want to go in with half or a third and keep the remaining on the sideline in case we go back in here, or get above B wave, and then the probabilities of it making a new high at that point are quite high. So basically the idea is try to get a good fill in here if this is the bottom, add the rest on when we break here, or if this is not the bottom and we see another turnaround and it does this time go into the high probability area, then you can wait for the turnaround here and add the other half on. And that's what the markets are like sometimes. They aren't absolute. So you have to be flexible in your thinking. And at the same time, if you're trying to accomplish getting into the next wave up, you don't want to chase the market, but by the same token, you want to sit back calmly and say, okay, bullish price bar, very close to the target. This would make sense to possibly put something on the trade here, but maybe be a little conservative because it didn't hit the 70% area. Now, another way you could do it is go all in and just put your stop way down here and then lower your trade size and put the entire trade size in that you want to based on the stop below that. Okay, you could do that. All right, but in any case, you're going to have multiple choices every time you make a trade. And don't forget, every time you make a trade, there's somebody taking an opposite trade, usually in the opposite direction. So you got to kind of keep that in mind. Any questions on that? All right, let me just see. Ken saying, Bennett just received your new book today. All right. All right, hi, because I know it's shipping, so I'm glad you got it. All right, high level, how does it differ from your first generation book? All right, so the first generation book, Ken, came out in 2008, so quite a long time ago. We've developed the OWL, PTF, TLM, and ERI indicators along with our scanners really since that first book. And in the first book, we had primarily just the art trading. That's the triangular approach, pyramid trading points. So that kind of, you know, there's a lot of software that's going to be in the new book that wasn't in the previous book, obviously. I've gone into many more of the current day types of things that we're noticing in the markets. For example, prop firms are an area. Brokerages have changed and how they approach things these days, and some more techniques on how to combine the indicators along with the art trading system. And I go into a little bit more of an elaboration on Elliott wave. So I kind of elaborated in greater detail of what we have touched generally in the first book. I've gone into great more detail in the second book, but I've also added quite a few new things. So you're going to see a lot of things that I have learned myself since the first book and decided to incorporate that going forward. So that's in the new book. So I think you'll find it kind of cool because we take a lot of the current concepts and elaborate on them quite a bit. I think it'll clarify things a great deal. So anyway, let me know how you like it. Okay, glad you got it. All right, so that's kind of something you got to think about when you trade any market. This happens to be Bitcoin, and it's not always gonna be so clean and cut dry. Now, one thing you can certainly know from the rule base is that you have to have at least some form of a red owl for this to be a major 4 or a 4 on this time frame. Sometimes you get a little bit of a pullback and then more highs, but those aren't major pullbacks unless the owl goes red. You know, we've had some here, a little bit here, but notice the owl stays green. So these pullbacks here are just kind of all part of wave 3. Wave 3 doesn't technically end until we get a red owl. And at that point, we can count on that as more significant profit taking. All right. The other thing too that I've kind of drawn in here in these gray boxes, these are fair value gaps. And basically fair value gaps occur in the market when you have an area where it takes 3 price bars, and the price bar basically in the middle, there's no overlapping wicks. That's the best way to say it. And so you have these gaps in there. And usually it's excessive buying pressure that it basically comes in, and it's usually by institutions. So those are areas where they started probably accumulating actually down in here, maybe in here, drove the market up and created a bunch of fair value gaps. It's very bullish when that happens, but also too, the market sometimes, because at these particular points, now the institutions are just going up with the profit, so to speak. And then when they pull back here, all right, they're taking profits and looking to buy again, possibly when they get back down into that fair value gap. So if the fair value gaps hold and price bars bounce off them, then that's support. If they go through them, they can act as future resistance levels. So we kind of pay attention to them. They act a little bit like magnets. And that's another case to be a little concerned that we didn't have a pullback far enough to hit those fair value gaps that are sitting smack right in the fib retracement area. And if that doesn't hit there, that means the market is extremely bullish, okay? Because normally they usually come back and touch those. So we'll see. So that's why I'm a little skeptical, especially with this price bar pattern here of a turnaround. We got one here, so we could go sideways, but I'm a little bit feeling that we still may go down and test that fib retracement area unless we get up above. Notice there's a bearish fair value gap here. This one touched it and sold off. So usually that's it's usually good for one touch, so to speak. All right. Any questions on that? Any questions? Now, if this is a bottom, then the next thing what I want to do is figure out where the next target is. All right. So we grab our fib extensions. right where we anchored 2, 3, and if that's a 4, then we'll anchor that there. And then the Bitcoin top on this next run should be around 123 up to 144. All right, we're sitting at 97. If the correction's not over, and instead the market heads back down and rebounds from here, then we're going to have to, of course, draw those fib extensions down from wherever the bottom is, and notice the target zone will come down as well. All right, so it's really important to, you know, establish where that bottom is, and if it goes back into that target area, that's probably as high as we're going to get, around 117 to 138. Now, with that said, what I normally do is, if I'm trying to just figure out a target and want to go in, I usually just take 50% of whatever the retracement was down here, all right, and use that as a projection, possible projection. So you can do that any way you want, but realize, unless you're definitively sure the correction's over, and I'm not, because we still have a red owl, we still could head back down into that target. So a lot of the market is imperfections and deciding how you want to handle those imperfections. All right, any other questions? And it can be on anything. Going once, going twice. All right, another question just came up is basically we've got some new folks here, and some of the problem one of our clients had was that he got rid of one of the windows that he normally sees open when he opens up his charting platform. And whether you're on TradeStation or NinjaTrader, it doesn't matter, but you can recreate those platforms by very easily just going in. But you do have to know how to use the charting platform, so that's really important. If you're on NinjaTrader and you wipe out a whole workspace or something, you could exit NinjaTrader and not save it, and then reopen it, and it will reopen itself the same way as if all those charts were loaded when you first opened it. And of course, if you need to actually bring any of those charts back, you got to go through the control panel, go to new, and then bring them up that way. All right, and basically it's just learning how to use your charting platform. Everybody at some point or another closes a chart they shouldn't, but you know, NinjaTrader by default pops up a window and says, are you sure you want to close this window? So if you're seeing that, if you make an error, that should save you as well. Okay, hopefully that helps. Hopefully that answer. Okay, is that good? And remember, when you close Ninja, you got to go to the control panel and do it from there. Don't click on any X's like on the market analyzer, which is the scanner, or any charts. Okay, let's take a look at that real quick and see. Let me just bring up the Dow and some of these others. So what's interesting about this is notice on the weekly chart here, Ken, notice that we have an uptrend in place. And even though we've had a pullback, it hasn't been enough to say the uptrend is no longer valid, because you can certainly see it came right down here to its area here on that move up on the trend line. So it bounced right off that trend line. And notice how strong the owl is here too. All right, now it is heading down, so we're going to keep an eye on that. But also too, there's some support areas sitting here, and even these down here, all right, that are pretty far away from current price action. So what's interesting is we had this fib drawn, we had the red owl, so probably we hit that. It's probably too early to tell because the owl is still red here, that we may actually come up, go down one more time, and then go up. Normally we see an owl after a bounce off the bottom to be a lot less down still. I mean, that owl is pretty down still. Okay, I don't even see bullish divergence. So this certainly could be a dead cat bounce, so to speak, followed by more movement down. All right, so I wouldn't put it past it. We did hit the target zone. We did get a reversal. So let's just see if there's any more follow through. But notice here, long move down. That's an A, B, C is a little shallow here. Okay, so we'll see what happens with that. And if it goes above here, all right, that may be an A, B, and then a C, or a more complex correction. On the 60-minute chart on the right, all right, you can see the turnaround there. But again, it's not convincing enough to say that we're going to be heading straight back up from here. We need to see a little bit more follow through. So basically what I want to see is that owl turn green on the daily chart. And it will, if this continues to surge up with enough momentum, that would be characteristic of a new wave 5 in place, but it hasn't gone that far yet, okay? So we'll certainly see, all right? We take a look at the NASDAQ, all right, we have a little bit of that bounce there too, okay? And again, a red, on this one here, we have a red owl here, bit of green here, so it looks like, you know, we may not, we probably are going to go up for a little while longer. We'll see if we take out that high when we get up there, okay? Time will certainly tell. And if that happens, if we don't get a further pull down than that, then I would suggest probably the next leg up will be maybe a significant and somewhat significant top. So we'll see on that. I see no need to exit long positions at this point, put it that way. And if you notice here, the pyramid on the NASDAQ has not been breached yet. Let's jump over to the S&P. This will be similar to, of course, the Dow as well. But you see, all the markets here are basically either in or touching their long-term bullish targets. So if you ask me if I thought a bubble was in the market, I think we are in a bubble in both housing and stocks. And I think it's too early to say if the bubble has bursted, but it will. And I think it probably will do it in 2025, this year sometime. But we just have to wait and follow the market and see if how much it needs to take out some key levels of support before we can start to think about the bull trend being over. Haven't quite done that yet. This is the kind of stuff I cover in my MOR report that I do every week. So if this kind of stuff interests you, you can certainly get that. I go into a lot more detail on that, and also in the housing market as well. All right, well, I think that's pretty much it. I don't see any more questions coming in. If anybody's got anything else, let me know. Other than that, we'll be back next week, same time. Anybody that's a new user of our software out there, this is the place you come for questions on that as you learn how to use it. I see quite a few of you here already. So currently we have thousands of traders using our software in over 80, I think it's 85 countries now. And we have a couple hedge funds as well. All right, I think that's it. We'll wrap it up today. It's a wrap up. All right, so have a great week. We'll be back here next week, and Happy New Year to everybody. All right, thanks for coming, guys. I'll put this recording on YouTube in the VIP special area. You know, that's the unlisted area. You have to access through that, through the client support portal, because we like to kind of keep these private. All right, have a good week, everybody. You're very welcome. Have a good one. Bye-bye.